Ladies and gentlemen, good day and welcome to Spandana Sphoorty Financial Limited Q2FY25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shalabh Saxena, MD and CEO, Spandana Sphoorty Financial Limited. Thank you, and over to you, Mr. Saxena.
Thank you very much. Good evening to all of you. Thank you for your interest in our company and for taking time out to join us on this call. Most of you would have gone through our results that have been uploaded on the stock exchanges a couple of hours ago. While the results are definitely underwhelming, please allow me to give you a context for these results. There have been, at an industry level, so let me begin with giving you some landscape on the industry, and then we'll go into the specifics of the company. So over the past couple of years, there have been subtle shifts that have happened in the sector. I'll take you through the happenings. Before that, as you are already aware, microfinance and the JLG model is the mainstay of our business. Q1 was the first quarter where we saw signs of weakness in the environment when the sector was impacted due to the long-drawn elections, intense heat waves, and the high attrition in a few states. This is what we had covered in our last call when we met up with all of you. The dilution of the JLG model, and when I say dilution, it is obviously not uniform, but there has been a dilution post-COVID. That is taking a time to turn around. This has impacted our center meetings, the discipline around the center meetings, and a key indicator of a customer engagement being center attendance. That is still at a 55% odd levels, so 55 to 60. Certain pockets are slightly higher, but I'm just averaging it out at a national level. Another point is that the field attrition level, and this we covered in detail the last time around, the field staff attrition level has been high over the past few quarters. Our understanding, and this is the deep engagement that we have done over the past quarter and a half with our field staff, which is both the branch and the supervisory level. The employees are obviously, there are various reasons, and we'll cover it in this opening remarks as well as in the subsequent questions if people would have. There are various people who react to the various challenges that are there in the market or that exist in the market. Our understanding from what we gathered was that most of them prefer to go out of the industry. There isn't a significant percentage which is moving into the industry, so that is what I would want to bring out. Another point is borrowers with established track record, they graduate or they are graduating to non-MFI loans. While there's nothing wrong in it, it is just that in times like these, it puts some bit of pressure on the finances of the family and hence the repayment capability. The last point on this landscape that I would want to highlight is borrower indebtedness, and we've covered this in detail. So borrower indebtedness is one of the challenges impacting the industry. If we look at the borrower indebtedness or over leveraging, I am just referring to slide 6 of the investor presentation. While when we gave the loan, we had a particular position. The position over the last 2 years, as per the latest data available, has seen a significant shift downwards from a Spandana and a Spandana plus one, the percentage of portfolio, it has moved and shifted downwards, and the numbers are given there. While, and you've been listening to us over the past many quarters, we have been maintaining a ticket size of not more than 80,000 irrespective of the vintage. That's the max ticket size that we offer. The tenor of the loans is 24 months. We introduced the 12 and 18. We obviously keep a close track of the indebtedness at a customer level. So the average indebtedness of a borrower with Spandana, while it has declined by 13%, however, we operate in an environment and hence there we've been impacted. The details are there in the slides. So this is the background of the industry and the impact on us. Obviously, we are doing our best, and the various initiatives that we have taken to kind of ensure that we arrest the situation and we try to turn this around. The environment will have to play its part, but we are doing our the best that we can as a team to ensure that we kind of manage the 2-3 clear vectors which are there, which is how you lend, how you collect, and most importantly, take care of your people. Back to the script. More recently, the disruption was caused over the past few months. You would have seen and read. The disruption was caused in few geographies due to the climatic factors like heavy rainfall and floods during the second quarter. So the sector has been experiencing influence in the form of localized movements also, which has further compounded the problems. As I mentioned, Spandana has not been immune to any of these challenges due to attrition over the past few quarters. The share of loan officers, and we've highlighted this in the presentation as well. So we've had now this share of loan officers with less than 1 year tenure at Spandana was 67%. This has to be looked at in context because we have opened new branches. Because our branches which are big, we split those branches as well. So the tenure has to be looked at in context, but the end result is that we have the 67% comparatively used to be about 50-51% just about 3-4 quarters back. So there's a bit of a rawness in the team, which obviously, given the fact that we've had the various challenges that I have elucidated too. On the branch manager side, this was the loan officer. On the branch manager side, and in the last earnings call, we had detailed to you, we had taken many steps to ensure that the branch manager attrition is curtailed, which I think we've been reasonably successful. Of the branch managers who we wanted to retain, there are regrettable resignations and there are non-regrettable resignations. Of the regrettable ones, we had taken an organization-wide initiative about a couple of months back to ensure that we reach out to them. And we've been reasonably successful. We were able to retain about 78% of the people who we wanted to retain. So I think as a headline, if I were to say, the branch manager reasonably protected, and we have to keep up and keep monitoring this important vector for the next few quarters. The supervisory layer above the branch manager we had some challenges, but that was not really, to the extent where we would be worried, and we've kind of taken care of them as well. This quarter and the next quarter is all about the loan officer and how do we engage with them to ensure we reduce the attrition at the loan officer level. Having considered the external and internal challenges, we had already announced a few measures during our last earnings call. The teams are working hard to normalize the operations. However, as a measure of abundant caution, the following additional steps were taken during the second quarter. The first, and I covered this, prioritizing people. We introduced a few cultural changes in the way business is conducted at Spandana, including focus on softer aspects like reward and recognition, team building, increasing employee connect through multiple channels of communication and meetings, compulsory system shutdown hours, leave policy, etc. All of these things all of these policies and initiatives were looked at, and we're kind of implementing them. We've already implemented them. Point number 2, conservative lending approach. As announced earlier, Spandana had paused onboarding to new to credit borrowers. The organization, so you would have read the guardrails and the way the industry has kind of joined together to ensure that we bring discipline. As a matter of abundant caution, we have announced internally that the organization will not be the fourth lender to new to Spandana borrower. So any borrower which is new to Spandana, we will be the third lender, although the guardrail allows fourth, but for now we are to begin with, we are saying that we will be the third lender. So this is slightly more conservative than the guardrails, and I think we'll see as it goes. Things improve and we might change, but at this point in time, this is what we are going to. This is one of the initiatives that we've undertaken. Point number 3 is on controls. Strengthening controls is something that we've been working on, and microfinance is all about how well you put a policy in place and how well you monitor. So on the control side, optimize supervisory span of control and monitoring, further strengthening of KYC checks, additional controls have been put in place to check frauds, etc. Point number 4 on collection focus. We have classified branches into three sets of branches: growth branches, stable branches, and focus, based on parameters like collection efficiency, portfolio quality, etc. Basis this qualification, we stopped new member acquisition in about 46% of the branches, which are essentially the focus branches. Similarly, we put restrictions in place to stop adding new centers in 15% of stable branches. So while customer acquisition is on in these branches, but however new centers, we just put a restriction to that. These restrictions we believe will help the field team of these branches to focus solely on ensuring timely collection of dues and meeting the customer's disbursement requirements as and when they might need. Point number 5, as announced in the last earnings call, Spandana has created a separate quality assurance layer at branches which will focus on process adherence, quality, customer service, etc. This will help free up the branch manager's bandwidth, allowing him to focus on business and control parameters. Point number 6, to ensure focus stays on collections, additional bench has been added across few branches. Dedicated collection team has been created, and borrower to loan officer span in select branches has been reduced. This has led to an increase in OPEX to AUM for the quarter, as you would have seen. But then these are temporary pains for quicker than usual normalization, and we expect by the year end, this OPEX to AUM to be cost to income to be about 45% by end of the year. We continue to believe that these challenges are transitory in nature and operations should normalize by end of the current financial year. We have not come across cultural changes in rural demand or long-term dip in economic activity or macroeconomic outlook or income levels. So this is very critical. Next few quarters, as far as the company is concerned, is we will drive the rigor and discipline of how well and judiciously we lend and how efficiently we collect. These is going to decide the coming quarters, and we as a team are geared up to kind of ensure that we run this in a very well and efficient manner. Now let me move to the regular business updates. On the business drivers, owing to challenges alluded to earlier, Spandana was cautious in lending. Our disbursement for the quarter was 1,514 crores, a YOY decline of 40%. AUM at the end of quarter 2 was 10,537 crores, registering a growth of 8% YOY. However, sequentially, the AUM declined by about 10%. While some 2-3 lines I've added on the AUM and the growth. I maintain and we believe, this is our discussions with the customer, the day we decide this is a segment which is always in need of a formal channel of finance, right now we are completely focused on ensuring that the stability on the portfolio quality side comes up sooner than later, and hence the slowing down of disbursement is a part of the larger strategy that we have, wherein we give more time to the branch to reach out to the not regular customers or the arrear customers, and we collect and get them back to a regular mode. The day we are confident that this will happen, which we believe is not very far, the AUM will be stepped up, and by the end of the year, we should be slightly more than what we ended the last year with, from an AUM point of view. I thought I'll just add this before I get into the next point. With pause in the customer acquisition, large number of branches, our total customer acquisition for the quarter was about 80,000 customers. The last time around, also in every earnings call, we give you details of our new lines of business, which is LAP and Nano Loans. Our LAP and Nano Loans business under our subsidiary Chris Financials is growing steadily. This we started about a year ago. We have now scaled the distribution to over 100 branches spread across 6 states, with AUM at the end of Q2 at about 160 crores. The portfolio quality under both these products continues to be strong. We invested last year in setting up systems and processes and continue to believe in the strong market potential of these products. Back to the portfolio quality of the microfinance business predominantly. This, at a company level, we continue to maintain provisioning at 80%. The quarter, because of the reasons that I alluded to, the quarter saw GNPA increase to 4.86%. Likewise, our NNPA for the quarter was 0.99%, up 46 bps over 0.53 reported at the end of June 24. On the liability and marginal cost of borrowings, including the borrowing mix, during the quarter, we borrowed 1,584 crores. The reduction in borrowing was due to the cautious disbursement approach that we had adopted as an organization. Our marginal cost of borrowing for the quarter was 11.4%, which was 46 bps lower than Q2FY24 and 61 bps higher over Q1 of FY25. Likewise, on the borrowing mix, the bank contribution in the total borrowing has increased to 54% at the end of Q2, by the end of Q2 FY25. On the Q2 financial year 25 financial performance, the net interest income for the quarter increased 9% YOY to 341 crores over 312 crores reported for Q2 of last year. Net interest income was down 20% over the last quarter. The PPOP for the quarter was 228 crores, which is down 12% YOY and 21% quarter on quarter. Yield on the portfolio was down by 202 pips to 22.4%. NIM for the quarter was 12.8%. NIMs declined as a result of decline in yield and increase in cost of borrowing. Our efforts are constantly focused on improving our cost of borrowing. However, the bigger opportunity lies in reversing the portfolio quality trend, where we'll get a lot of releases. For the profit after tax, higher provisioning at the end of the quarter has led to a decline in the PAT, and we've reported, as you would have seen, a loss of 216 crores. We continue to believe that these challenges are transitory and expect operations to normalize by end of the current financial year. The steps taken to course correct will be monitored very closely, and all our actions will now be focused on improving the portfolio quality. We will continue to be prudent in our approach to lending, ensuring that our portfolio is well diversified while staying conservative on ticket sizes and customer indebtedness. The entire management team of Spandana is thankful for the consistent feedback that we've been receiving from all of you. We look forward to your continued support. We can now open up for questions, operator.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Rajiv Mehta with Yes Securities. Please go ahead.
Yeah, hi. Good evening. So my question is on stage 2, which has substantially increased. So when I look at previous quarter, the kind of increase we saw in stage 2 in 1Q, and then the flow which came in 2Q in stage 3, it seems that the flow rates are significantly high. Almost everything is flowing from stage 2 to stage 3, despite augmented collection effort. So now that stage 2 has further increased so substantially in Q2, would this assessment be correct that a significant part of it will flow in Q3?
Hi Rajiv, this is Ashish this side. I mean, if we do a simple math, maybe what you are saying adds up. But the right way to look at it is there has been almost 50% collections happening even in the stage 2 buckets. Okay. Although the flows at the top is what is contributing the flows going below, so that needs to stabilize, and that's what we are working on.
Let me just add, Rajiv. The recruitment, we started additional manpower recruitment beginning of last quarter. Somewhere around July and August. So the incremental benefits of all the people that we have recruited and all the people who've been, in the branches where we've taken, we will see the incremental benefits only this quarter. That's number one. Number two is, even if, and I kind of mathematically obviously, agree to you, but what we are, for the flows also which have happened, we've additionally we have a recovery team now, which will, because you don't disturb the core, we will not disturb the core of the model, which is until 90 the loan officer handles. Beyond 90, because we still feel, we've analyzed, Rajiv, the portfolio, the customers who are kind of flowing, who have kind of crossed the buckets. We believe that these are all customers. So there is no specific trend of a particular quarter, sourcing being bad or a particular year sourcing being bad. There is a very clear linearity in the vintage and the contribution of the AUM and the subsequent percentage of SMA customers in those buckets. So our belief is, for customers who've been with us for 4 years, 5 years, 6 years, it is probably the current disruption in the environment that is leading them to not really honor their payments, is our belief. So our recovery team, which has now been set up, we already have some 300 odd people, and by in the next, or rather this month and max by mid of next month, we will have around 550 people who will approach these customers, and we'll start the recovery initiative. So that's going to add to, so we believe, because these customers from an intent point of view is not an issue. They are all old customers with us. So that should also incrementally play out to our benefit as we progress.
Got it. And just to understand that, that the problem addition is now stabilizing or curtailing, if we can get the collection efficiency of the 0 DPD bucket and how it is moving between September and October, because I think Ashish did point out that the leakages or the slippages are coming from the top. So if we want to understand that whether the slippages at the top are reducing now incrementally, we need to know the 0 DPD collection efficiency bucket, collection efficiency, and how that is moving incrementally.
Yeah, so I will directionally answer that. October obviously will be difficult one to answer here, but directionally, is there a significant better movement? The answer is no, Rajiv.
Okay.
Are there green shoots in certain pockets? The answer is yes. Is there a clear correlation where you put people and it is going to help you? The answer is again yes. And we are seeing some initial green shoots. But are the green shoots going to convert into a trend? It is too early for us to say. However, our understanding of the problem and the pockets that have been impacted, and our various engagements over the past 3 months with the teams on the ground, I think we have a reasonable sense of the extent of the problem and the next steps as far as the problems are concerned. That is why we've kind of recruited the people and put them in places where we will be, where we have an issue. The second point, additional point, Rajiv, also is a fact that there is, like it or not, because of the environmental challenges, most of the people have curtailed. Many companies, or rather, practically every company has curtailed their lending because, and rightfully so, we are no different. So this has led to some bit of shortage in the circulation from a customer's working capital point of view. So we are dealing with all this. Our belief is that the customer's intent is not a problem. It is just some bit of working capital adjustment that needs to be done on her part. And more engaged we are, the better the chance that we'll be regularizing it soon.
And on this ESOP, I mean, what is the ESOP penetration within the company? I mean, till what level have we distributed ESOPs, and how many people would be covered? If you can give that some color. And second is, you spoke about that you've been able to retain some of the outgoing BMs whom you wanted to retain. So how were they retained? I mean, were they offered, were their bandwidth got released, and which is why, they stayed back, or some other initiatives were taken to retain them?
Yeah, so the good part, Rajiv, and so it's a very good question because, that's exactly our focus, because we believe that if you have happy people around, the rest is an outcome which can be taken care of. For the specific point that you mentioned on the branch manager, because that is what we had identified the last time around, because that was a problem that could be addressed because we have some 1,700, 1,650 odd branch managers. We physically went out to them. Different senior people went out to 36 locations and had a physical meeting with them. And that led to the turnaround where we were able to retain almost 78% of the branch managers who were serving notice. Now, did we offer them anything? The answer is no. Did we give them any other benefit outside of that? That obviously is not correct also, because somebody resigns, you don't really offer them anything which is monetary. All it required us was to have a good discussion of and understanding of what were the issues that they were facing, and clearly there were issues, and hence they were where they were. We were able to come back to them in terms of the action steps, and we have some list of 10, 12 action steps which we had to take, which we've already implemented at an organization level. So that within a space of about 10 days, we had all of them pull back their resignations. Once we had, and our belief, and we continue to believe, that if you take care of your branch manager, then which we did the last time around, this time our initiatives, now we've already started those initiatives, which is to connect at a LO level through the branch manager. So ensure that the branch manager and the supervisory level have their KRAs very well integrated to the larger objective of the organization, which is holding back the LOs. Once you hold them, because any native knowledge which goes out of your company, it takes about 2-3 months for a new person to really come and then come up to speed. So, overall, I think we are as a team very happy with the way we've kind of dealt with branch managers and above. As an organization, reaching out to 36 locations across almost about 2,500 people, which is branch managers and above, I think was a good step and a timely step, which gave us results. I think another month and a half, I think, we should be in a decent position to at least come to a place where we, apart from the branch manager, we start seeing incremental results on the loan officer side as well.
Thank you. Mr. Mehta, please rejoin the queue for more questions. Next question comes from the line of Shripal Doshi with Equirus. Please go ahead.
Hi, sir. Good evening. Thank you for giving me the opportunity. So my question was, while a few questions have been answered, but just a data keeping question. What is our, Spandana plus 4 and unique to Spandana customer base?
वो उसमें स्लाइड नंबर 6 पे श्रीपाल लेफ्ट हैंड टॉप बॉटम टॉप टेबल है.
Okay. Okay. Got it. I'll go through that then. Yeah. And sir, just another question was on this, the rise in power numbers, right? So is it fair to take it this way that the MFIN guardrails have led to an accelerated recognition of stress or the movement of stage 1 to stage 2 and then so forth has been pretty sharp?
So Shripal, so here is my view. Any step which is taken which is good for the industry, should be welcomed, and I think, in fact, we have, and you would have, I don't know if you picked it up in my commentary, we have said that new to Spandana, we are going a step ahead. We will not be the fourth lender. So effectively, we are stopping at 1. We are stopping at 3. So दवाई कड़वी होगी तो भी चलेगी, मगर the end result has to be that we all of us get well, as an industry. So that's where I am not looking at it 1 quarter or 2 months or 1 month. I'm looking to 4 quarters, 8 quarters. I think it's a step in the right direction, and I think everybody is going to benefit out of this.
Okay. And just last question, I think it is part of your commentary as well. You highlighted that much of the stress will get absorbed or say taken care of during this year itself. So like you think that will be a function of collections improving from say December and onwards. Otherwise, like, do you think there will be spillover in the next year as well?
So we are giving. So we still have about 5 months to go before the end of the year. As I mentioned, I think I gave a lengthy commentary to Rajiv in the previous question. We are seeing some movement in the market, but we are not really. It is still not a trend. Hence, I am hesitating to say anything. In terms of this is going to turn around by December or January. However, the last 2 quarters are the quarters which are good for the industry. Number one. Number two, we believe that with all the other initiatives that we have taken, plus the initiative which the SRO has taken, I think will ultimately lead to a situation where I think the environment operates for the right lending more than anything else. So that's the belief. It took 3 months to for the position that we are in. We are still giving 5 months for this to improve. So I think we are already 2 quarters down in this year where we dealt with this problem. So my belief is that attrition stabilizing, environment stabilizing, lending slightly curtailed, customer discipline back. I think we should by end of the year be able to come out of this.
Got it, sir. Got it. Thank you so much, sir, and good luck for the next one.
Thanks.
Thank you. Next question comes from the line of Renish with ICICI. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, 3 questions. So we'll go one by one. So, sir, if we look at that slide, it is very much visible that we have been prudent lender and reflecting 4+ lender share at the time of disbursement at around 5%. But then eventually it increases to 13%. Clearly, players are just lending without proper cash flow assessment, maybe leading to over leverage. And despite we being the conservative lender, we have to pay a price, for over leveraging done by others. So how do you think, this can be taken care going ahead? I mean, do you foresee SRO, regulator, or, anyone sort of talking about it and maybe, they are maybe in discussion stage, whatever, but any insights on this will be very helpful, sir.
Yeah, so Renish, I partly answered, so I'll start and then Ashish will add. I completely agree with what you've said. With customers who are with us already, we have limited options but to go and keep pursuing. somewhere in the commentary, I did mention that if for all the customer acquisition that we are going to start doing now, if there is a borrower who's new to Spandana, we will not be the fourth, even though the guardrails allow you to be the fourth, we will be only the third. If we are the fourth, then we will regretfully not do the case. So that is one of the initiatives that we have taken because Ramesh, we've kind of analyzed various data points all these months that we've been doing. While there could be patchy trends on various theories that you and I would have, but one of the trends which is unmistakable is the correlation of lenders and the collection efficiency stroke GNPA. The more the number of lenders, clearly there is a higher pool of arrear customers in corresponding to the AUM that you would have. I'll give you a data point, and Ashish just add to this. The 5 and greater than 5 lenders is about 12% in our AUM, 12.5% in our AUM, and these set of customers' contribution to the arrear bucket, which includes the GNPA, is about 21%.
So you mean 1 plus DPD?
हाँ, इसमें सभी ले लिया मैंने, arrear भी ले लिया और GNPA भी ले लिया. So basically, see, we are discussing quality, the portfolio quality. अब वो चाहे 30 हो या GNPA में flow हो गया. So this is the point. I'm just trying to validate the point that I made, that the more number of lenders, there's a clear trend that it kind of stresses out the customer. Here we are not talking of, because more number of lenders, you have to attend as many center meetings and so on and so forth. This is also one of the reasons why the center meeting attendance could be low, because 4 or 5 companies and weekly and combination of fortnightly and monthly, I mean it's a bit of a stretch for the customer. So that's the reason why, to answer your question, we've kind of made it a policy until things resume back to normalcy. On one, we will continue to not offer new to credit customers a loan because of, I covered this in detail last time around, because there's so much of operational time which goes, and there are other things as well, which influence this. That's number one. Number two is on this 4 and more than 4. If it is an existing customer of Spandana, then obviously she has to be regular, and then we'll see if we have to continue. If she applies for another loan, we will evaluate. But if it is a new to Spandana customer, then we are stopping one short of what is agreed upon by everybody, which is we will not be the 4th lender. We will stop at 3.
Yeah, the hygiene will get built over time, Renish, because I think the SROs have already come out with this guardrails, and if and we have a strong reason to believe everybody will follow the guardrails, and that will condition the behavior at the customer level also over a period of time. So I think that is what is going to take care of what you mentioned, that how would this discipline come in. This is how the discipline will come. Given that the weighted average maturity, at least for, let's say, Spandana, in terms of the portfolio is only 8.6 months. If this origination is improved, at best, 2 more quarters or 3 quarters, you should be able to, refine the entire book.
I would also want to add, Renish, before you go to your second question. There are, for vintage customers, there is a practice to graduate them from a JLG customer to an individual borrower and give a higher loan. We've stayed away from that path, and we will continue to stay away from the path. The hope is that, once there is some bit of discipline around, what we will see is, because ultimately the money lands into the family. So, once all of that is slightly pruned, we will see definitely some bit of an uptake in the, in the repayment capability and capacity of the customer. Yeah. Over to your next question.
Got it. Thank you, sir. So the second is again in terms of the stress, so if you can just highlight, this stress in maybe last 2 to 6 months is coming from which state, district, etc. I mean, is there a real cash flow impact at the borrower level, or is it just because of the pure over leveraging sort of which is leading to this stress?
नहीं इसमें ना I think I mentioned Renish कोई specific the trend is linear to the AUM that is there across the vintages. Okay, so what happens is that we cannot say that last year वाले में ही problem है या FY22 की sourcing में problem है, so it is not that. If I look at my 5-year, and just to give you an illustration, if my 4-year vintage customer is about 10% of my AUM, the contribution of that 10% in the GNPA and the SMA buckets also is equivalent. It could be 9 or 11, thereabouts. So that is a cause of optimism, because क्या होता है कि which means that there are multiple factors at play. While it could also be, and I must add, it could also be our see, we are not picture perfect. It could be our inability to kind of reach out to that customer at that point in time, which could have led to where we are. So I'm not shying away from that at all. So hence we went back to just repeating the point. Once you staff when you have adequate staffing, when you have a motivated branch team, and if you reduce the workload on them, we will be able to address each of these customers. Until now, Renish, in microfinance, you would not need to customize a solution in case of a disruption. However, in the current times, there is a need. This whole one size fits all does not work. So hence, we will need to customize all of these resolutions back until all of them are back into the JLG channel and center meeting channel.
Got it. And maybe just the last question is more on a strategy side. I mean, so let's say, after every crisis, things sort of changes. So let's say post demon industry move to cashless disbursement. Clearly, now people are talking about, let's say, paperless or maybe tech-driven underwriting. So after this crisis, do you feel there will be need for a separate collection mechanism for this product as well?
So look, this is a very subjective question. It is a fair question with very subjective answers. People will give different answers. There are companies already which are following 1 to 30 loan officer के पास रहता है, and then it moves to a different team. Certain companies follow once the customer flows into a GNPA, you have a different team recovering, because the customer, for all practical purposes, stops coming to the center meeting. So essentially, it's a door knock. Now, if you were to ask our company's view, we would prefer the latter. I don't think we should be. This is a very closely integrated model where you lend and collect. The same person lends and collects, and there is a group which influences both. The moment you try to fracture it or you try to dislocate that model, there are implications which will have to be dealt with or which will have to be felt. We are not in this camp, but we do believe that, in our case, and I covered it in my opening remarks as well, once a customer flows into GNPA, she practically stops coming to the center meeting. That is when, a different team follows. There's a lot of value that it will generate. Till the time, and once again, let me add, till the time this is regularized, once it is regularized, then you can move back to the BAU, which was everybody does everything. I mean, one person, the loan officer, does everything. But at this point in time, it is advisable to, just focus on the 90 plus with a different team.
Got it. This is very helpful, sir. Thank you and best of luck, sir.
Thank you.
Thank you. Next question comes from the line of Abhijit Tibrewal with Motilal Oswal Financial Services Limited. Please go ahead.
Hello, am I audible?
Yeah, Abhijit.
Yeah. Hi, sir. So a couple of things I want to understand. One is, in your slides, you've talked about improving KYC. I feel this is one topic which has not been addressed adequately by the players in the ecosystem. So what I'm trying to understand is, during a lot of findings that you did, what did you come across in terms of the fact that all the players lend on voter IDs? And to that extent, right, that problem that we've heard of customers having multiple voter IDs and taking multiple loans on these multiple voter IDs, is that a very big problem today in the industry, or something which is trivial and doesn't warrant much attention?
So such instances do they contribute to 5% of the book? The answer is no. The question is that would you want to experiment this and take that call when you already have a situation at hand, is the question that is to be debated. At this point in time, and that is why when we stopped it, we didn't notice some of what you already said, Abhijit. So there were two options, So what is the option? The first is when you acquire a new customer who's new to Spandana, and specifically new to credit, you have to do a lot of diligence. You have to go home, visit home, and so on. And so operationally, the process is about 2-3 days. So rather than walk that path, we said for now we will stop and continue to focus on customers who have a valid KYC. Now, who have taken a loan from somewhere, which is not new to credit. Having said which, there are instances that have been noticed to the likes of what you've just mentioned. There are also instances where you don't get a hit at a point in time and then get a hit the second time around if you try after the next day. So there are some tech issues as well, that have to be grappled with. So while we are dealing with that, is there a problem? The problem accentuates in this kind of a disrupted scenario. So the best that we thought of was to avoid that path and hence focus on customers and for people who are not new to credit, as in they have a credit history. We do checks internally to ensure all the instances that you just mentioned in terms of multiple IDs and all of that. So we try doing it because ultimately it comes from one source and can be checked. All it requires you to do is to ensure that you do it some 2-3 times to just validate the point that you just made. So you have to be cautious, and in good times these things really go unnoticed. In these times, it's always good that these things come up and you integrate it into a process so that it stands by the test of time in the future.
Got it. So the other thing is, during your opening remarks, you touched upon your expectations of cost-income ratio, AUM growth, maybe slightly higher versus where we ended in March. So, maybe I missed it, but did you also guide on credit costs?
No. So this is a fluid situation, Abhijit, and we are avoiding that guidance point because, see, when Q1 happened, to be honest, at least we took some time to understand the scale. At this point in time, we are avoiding any such guidance. We'll wait until Q3 to end for us to stick our neck out, and either way, about 75% we would have done from a tenure point of view. In a year, you would have done 3 out of 4 quarters. So that is when we'll be in a reasonable position. So the situation is pretty dynamic. So, we are avoiding walking that path at this point in time.
Got it. So just one last question, or the 2 questions. One is a clarification for Ashish sir. So, but the third one, sir, for you. So don't you think that that MFI players now need to start lending to their customers/vintage customers in 2x? Otherwise, with the tightness which is there in working capital, even your good customers might start exhibiting delinquencies if you don't loosen your purse strings. I'm talking about the industry and the sector as a whole.
Yeah, I agree. So see, it is, forget the industry and what you do to the industry. It is about if a customer has been paying you well over the past 12, 24 months, 36 months and has been with you for long, you don't hold back, right? You have to suffice the demand, otherwise you will end up aggravating the situation. I think that's the point you are making. And hence, now that we have built a framework to ensure that you take care of your earlier customers, in terms of the resolution and getting them back on track. It is important that, at least we as a company, as in Spandana, we have started the process of trying to ensure that, customers, we keep meeting the demand of the customer who are desirous of a loan. Obviously, the checks will be slightly more stringent from what we would have otherwise done. But then so be it. If a customer has been prudent and has displayed good behavior over the past couple of years and more, I think, we should be giving. And I'm sure everybody takes time, including us, to respond to a fast changing environment. My belief is that now we are seized of the problem. Everybody understands the nature of the problem and the way out. And one of the solutions is definitely, not solutions, one of the given is that you have to start and regularizing and normalizing the disbursement part, provided you are convinced on the customer's ability to pay in the future, because you also don't want a situation where you lend and then the customer goes the other way. So it's a balanced view that one has to take, and we have put in, we do believe that that is the way forward.
Thank you, sir. And just one last question for Ashish, sir. Sir, is there a different methodology using which we calculate our NIMs? Now, why I ask is, other peers, when they report the results, you see, despite so much stress, there is no change in the way they report their margins. A large part of the stress which is seen in their P&L is in their credit costs. For us, I see that hit is there both on top line as well as the credit costs. So, how should we understand this?
So there are two things which will impact the top line and thus NIM. One is, any flows into the GNPA, we reverse the incomes. So, the interest that has been already accrued. So that obviously impacts the top line. Second thing is, any transactions that we would have done on the DA side, that will also, have an impact on both the denominator as well as numerator. The income will move to a different line item for the quarter, to the extent of, whatever time frame, and whatever the upfronting happens, all of that goes into a separate line item, doesn't form part of the NIM when we do the calculation. These are the two primary things which will keep, impacting the calculation, Abhijit.
Got it. This is very, very useful. Thank you, and wish you good luck for the coming quarters.
Thank you.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Ritika Dua with Bandhan. Please go ahead.
Yes, sir, thank you. Sir, actually, one first basic question. Whenever everybody is reporting, say like Spandana plus 1, 2, 3, or maybe say like one NBFC MFI plus the 1, 2, 3, how is this getting reported?
So every time, let's say, when we do the credit bureau, now, for example, we have said we will not be the 5th lender for the existing borrowers, or if we are going to originate a new customer, then we will not be the 4th lender. If there are already 3 lenders, then we will reject the loan. Otherwise, when we give the loan, we will report that, we have lent. This is how the reporting happens, and it happens every week.
And so here, obviously, sorry again, but then just here again, only the NBFC MFI are the 4 which you are looking at, and also only the MFI loan that you are looking at.
All the microfinance loans we are looking at, including, if the loan was given by a bank or a Section 25 or through a BC or any of the participants who do microfinance loans, all are covered.
But if this person has taken, or lady or has taken, maybe, I don't know if that will exactly reflect, but if her husband has taken maybe a 2-wheeler loan or something, or maybe, some gold loan that the lady has taken, that is still out of the purview.
Yeah, so let me explain. there is sequentially there is a FOIR which is calculated, which is, so first of all, the household income has to be less than 300,000 for it to qualify for a microfinance loan. Any household with an income of more than 3 lakhs obviously doesn't enter our system. That's point number one. Point number two is in the specific example that you gave, where the husband has taken a two-wheeler loan. There is a liability which he must be servicing. That liability gets included in the allowable liability. So 50% is what is the allowable, 50% is towards expenses, and then the 50% is towards the allowable as far as the installment is concerned. So when you calculate the eligibility of the customer, all of this is taken into account. That's how sequentially you have to work at. And then obviously, how much is the, what is the, the customer's installment depending on the loan she takes, will decide how much she is eligible for. On the gold loan, there is a criteria which has already been announced. You were just illustrating the gold loan, hence I'm kind of hitting on it. Earlier, there were some different methods which were used. Now it has been standardized into how you calculate the liability of a gold loan also. So net, the borrowing at a family level also enters into the calculation of FOIR to determine the eligibility of the customer.
Sure, sir. And sir, obviously why I'm trying to understand this is linked to my second question I have. So obviously of the NBFC MFIs who have reported so far, which have actually been very transparent in terms of, them plus the other lender exposure. Obviously we don't know so much from the other players. So they obviously are disclosing on an average 12 to 13% at least is, 4 plus for somebody. And maybe, and if I go by the conservative way that you are going.
Hello.
Ritika, are you there?
Yes, we have lost the line. Next question comes from the line of Kavita Shah. Please go ahead.
What? Yeah. Because suddenly we seem to have lost quite a lot. All of them
I'll
are
just make an announcement. Reminder to all the participants that you may press star and 1 to ask a question.
Hi, Ketav here. Sir, good evening. Not a very resounding quarter, of course. But sir, you mentioned some areas of green shoots. And if you can throw some light around whether it is state-wise or still it's pocket for you to, not elucidate too much. As in, are certain states coming back or it's just pockets that are coming back?
No, there are patches. It's not, there's nothing called a state, it is, na to kabhi koi, unless if there is a calamity, it impacts whichever regions it impacts is what it will be impacted. So my specific comment was patches in various states, including the ones which are stressed. But the reason why I'm dithering in terms of getting into the details is it is still not a trend. So we don't want to celebrate earlier than what we should. We'll just wait for it to become a trend. And our belief is that, we should start seeing some turnaround so as to ensure that by end of this year we are well in track to, sort of put 2024 or FY25 behind us and move towards into FY26 with a smile on our face.
So thank you. Thank you so much. Yeah, that's it from me.
Thanks, Peter.
Yeah, just get Ritika, we lost her.
Sure. Next question comes from the line of Ritika Dua from Bandhan. Please go ahead.
Hi, sorry, am I audible?
Yeah, Ritika, we lost you somewhere, so if you can repeat that question.
Yes, sir, sorry, sir. Thank you for allowing again. Sir, I was just more from an industry standpoint. Like I'm saying that, the NBFC MFIs have been, at least being transparent in terms of the numbers we know. We don't know it for the other players. But if I go by the way you've been conservative and, not lending to even going to the fourth lender also now, that number then from an industry standpoint maybe could be like 25% of the book for some of the large players, including maybe for yourself also. And then maybe there are some bit of the customers who are already unique and where we would have already been giving loans out. So that combined becomes a very large pie wherein, if we continue to lend more, that might maybe, or rather there is a large pie which if we are not continuing to lend more, how would the industry growth maybe pan out, maybe looking more into 26 and 27? I think 25 is something which we all maybe can maybe understand, but how would the 26, 27 growth rate look like if at all? Because if we now again look to lend to them, then we are back to the same situation.
So Ritika, see, this is a problem. In a buoyant market, everything looks rosy, and when things go down, everything looks very grim. The life is in between. There's a gray, and we have to thrive in the gray. So one of the things that you said, there are two things. One of the biggest advantage that microfinance as an industry has is that this is the last mile delivery in markets where where customers still don't have access to formal channel of finance. The alternate for this is only the money lender, to the best of there isn't anything in between, which obviously is not a choice. So the prudence or the discipline around has to be at an environment level, which includes both the players, which includes us, let me add, and the customers as well. The situation that we are in obviously is a reminder to everybody and also the customer. We shouldn't leave out the customers in this whole scheme of things, where they will realize, and I'm sure they will, that a good credit score is important to maintain for you to get a subsequent funding. And that's very critical. So that should set in very fast, because this is a working capital loan for a segment which needs the capital to thrive and survive. So I wouldn't really get into painting a doomsday scenario for 26 and 27. It is just that something triggered, something happened, which led to some bit of disruption in the discipline. And obviously, we've been making this point around that, once you have a control on the number of lenders, there will be some, the regularization will happen much faster. So the demand is still intact. The penetration of the addressable market is still at a 40-45%. So you still have a headroom, and India is still a very large country. So it is just that, a 40,000 from 5 lenders is not the most ideal. A 40,000 from 3 would be great. And then if you see the industry data also, in the past 2 years, industry has added, from a 4.8, I think, to 8 crores is the unique customers that have kind of, from a 5.8 to 8 crores. So the industry has added about 2.2 crore customers or 20 million customers in a space of 24 months. So you are reaching out to newer, fresher territories. All those things are there. So and that's why in my comment also I made this point, Ritika, that structurally there isn't any, this is a temporary disruption. This is a transitory phase. Structurally, both the demand and the income levels, see, all this while we've been discussing, the income levels, even if you, we read this, if you see our deck, and we've made it a point, look at the average, borrower outstanding. If you go to our slide number 3, if you see the average borrowing at a customer level over the past 2 years has hardly gone up. 8%, we are not even getting inflation here. 8% growth on a point-to-point basis. So annualized will be probably 3, 4, or whatever that number is. Likewise, the ticket size also has increased by 21% over 2 years. So which is what, about 10, 11%, 9, 10% annualized. All of this, if you see, you will have, I do believe that, these are signs that, things structurally are okay. It is just that, this whole, and people who believe in the joint liability, and we are one, if you were to continue doing what is right and get to a stage where you are, don't increase the tenure. We don't do a 36 and a 48. Stick to shorter tenures, stick to lower loans, turn the loans around fast. I think you should be fine. yes, we have to suffer from the collateral damage, but then, we will do everything to ensure that, we also do some things which we should have done but did not do. So unfinished agenda plus wait for the industry to kind of get this thing right.
Thank you so much. Thank you.
Thank you. Next question comes from the line of Aviral Jain with Singular Gulf. Please go ahead.
Yeah, thank you so much. Sharad, a couple of questions. One is on the collection efficiency. So has that stabilized? Because Q2 has been much worse than Q1, even for your weekly branches. And that's the first time where you would see some sort of a stabilization where you've clearly said that you've not seen any trend as such. But any specifics around the collection efficiency at a gross or net level?
Yeah, so absolutes are high. Aviral, this is Ashish. Absolutes are something that we'll not be able to disclose. But yeah, like Shalabh was explaining, trend-wise, it is similar. There has not been much improvement that we have registered or seen. But we very hopeful that, by end of the financial year, we will see all of this, going back to normalcy. The reason is, we have taken a lot of steps in terms of, deploying people, adding a monitoring line in the branches, and the guardrails have been implemented across the industry, kind of will condition the, the behavior from the customer side, and things should start looking better.
So, and as a consequence, given you have deployed additional resources both at the branch level and you have more recovery team for 90 plus, would it be fair to, and this is not asking for a guidance, but you could still have more slippages from a 90 plus standpoint and also from a 0 plus standpoint going forward in this quarter, which is Q3 and Q4 as well. Would it be less accelerated? That's my question.
Yeah, Aviral, that would be getting into specifics. And to be very honest, if we had a line of sight, we would have been very forthright. However, at this point in time, and if you see my commentary, we are cautiously optimistic. But however, the optimism is not 1 quarter, 2 quarters. I would not. Even a 4 quarter is good enough, and we do believe that by end of this year, once we are out of this problem, this is the stage where we are in. It is not a quarterly discussion. It is a 2 to 4 quarter discussion, and I think we should look at this business at, even if we look at the 2, ideally we should be looking at least a 2-year horizon. But even if for discussion's sake, if we were to say to the specific point that you asked, 2 to 4 quarter, if we were to discuss, we are reasonably optimistic that once we reach the end of this year, I think we will be in a much better shape, because these things. See, the reason why microfinance as an industry is said to be resilient is for exactly the various points that I've been mentioning in the commentary and the answers that we've been giving and Ashish has been giving. The alternate product for the customer aren't too many. The demand is intact. The income levels haven't been impacted. There could be some indiscretion here and there at a customer level too. All of that will 2 quarters have already gone by where everybody is feeling the pinch, which is both enterprises and the customer. I think it should turn around fast is our belief.
Okay.
But back to your question, are we seeing trends yet? The answer is no.
Sure. And so finally, the question of, you mentioned that you expect to end up with an AUM which is higher than what it was when you started the year with. So the acceleration in AUM would come from where? Newer customer recruitment, or because industry would have weeded out all the borrowers who could not repay. So then a regularized credit cycle would start. And also on the supply side, I would believe that a lot of undercapitalized the smaller NBFC MFIs would be facing a lot more trouble because they won't have the resources even when the industry situation normalizes to be even able to give out the sort of, on an aggregate basis, the overall supply potential in the industry would be reduced, given lender will have challenges raising resources.
So the growth will come, at least for our company, I speak for Spandana, the growth will come predominantly from the existing base that we have, for all the reasons that I have been mentioning until now in this call. We believe that that's a safer bet. That's point number one. Point number two, Aviral, is that this is for the past 2 quarters. The demand, nothing has driven the demand downwards. However, the supply has been constrained for the reasons, once again, that we've discussed in detail. So there will be a pent-up demand which is there, which for now, instead of going out and acquiring a fresh set of customers, we believe that this quarter at least we will stick to, focusing on our customers, because we ourselves have a lot of potential within which we would not have explored in the past 2 quarters that we've been dealing with this. So, quarter 4 we'll evaluate when we end the quarter 3 in terms of we go out, are intact on our belief on the fact that, this is a segment which predominantly is a good segment. Something has happened in the last 2 quarters which we are reasonably sure that things will turn around. Plus, apart from this, Aviral, you are aware we've opened a lot of new branches. The weekly model itself, about 450 branches were opened in the last 1 year. All of them will start delivering. The customers who we had acquired are now graduating into for a second loan. So demand from our side is, when I say our side, means the customer side, is not an issue. It is just that we wanted to cool this whole thing down within. Once we are out of this, we will start, and in fact, we've already started pushing the pedal on the disbursements.
And one last question is, what sort of recovery would you be able to see? Again, this could be difficult to project from today, but given your long experience in the industry, both you and Ashish, so you have a certain stock of 90 plus, and there is a big write-off also that was taken, some 260 odd crores this quarter. So could there be recoveries, given you have also put in a recovery team which is 300 people and then adding 200 more?
Hi, Aviral. Basically, we like you rightly said, it is difficult to project in the current environment. But if one has to, just go by the previous experience of the data, then it can be anywhere between 20 to 30% in terms of recoveries, despite this thing. Since this is not necessarily all of the hard bucket which is flown into the GNPA, there will be customers who might have had temporary challenges. There will be customers who might have gone into the stress bucket because of, let's say, our logistics issues, which kind of Shalabh was explaining earlier. So there are various kinds of customers who have moved into the GNPA bucket, and thus there is a opportunity to collect higher than what one would have in a normal course collected from this bucket.
Sure, thanks.
Mr. Jain, are you done with your questions?
Yeah.
Thank you.
Thank you.
Next question comes from the line of Ashlesh Sonje with Kotak Securities. Please go ahead.
Hi team, good evening. Hope you can hear me well. So first question is on the weekly model. If I go back 1 year ago, you had roughly, actually slightly more than 20% branches in the weekly model. Do you see that at least in those branches, the behavior on collection is different?
Yeah, so if you see the slides, slide number 10, our weekly collection efficiency, the right-hand bottom table, the gross collection efficiency is nearing 97% and the net is 94.2. It is in line with while these branches are still in the same pockets or markets where a monthly branch is having slightly more stress, but clearly weekly branches are behaving well, better than the non-weekly branches. So this goes back to the point that we had made 2 years back, that weekly branch is the way to go. Yes, things did not work out for us. We started with a good intent, which was the project Parivartan. Things didn't work out, but then, at an appropriate time, our fundamental belief is that a weekly is the way to go for the institution.
Understood, sir. Sir, and secondly, if I look at the data which you have shared on slide number 6, roughly 5% of the borrowers, when you disbursed a loan to them, had 5 lenders associated with those borrowers, right? So given that average disbursement ticket size at the industry level is roughly 48,000 rupees for a loan, what kind of gives us the comfort when we disburse being the fifth lender at that point in time, even for the 5% set of borrowers?
Actually, क्या होता है कि not every customer would have peaked off at the peak, when the lending is done. People would be at various stages of their rundowns of the specific loans. This is at a lender, so I could have 5 loans from 5 different lenders, one with an outstanding of 5,000, 10,000, 15,000, etc. Ultimately, all of this converges into the FOIR, which is calculated for the customer, and she would have been eligible at that point in time. That is why we we walked that path. But nevertheless, we are wise now, and which goes back to, and I am sure you would be listening to the call, that we've been on, and we've been highlighting this point, that forget the total outstanding at a customer level, but there is a very clear correlation of the number of lenders to the behavior or the portfolio quality. That is irrespective of the indebtedness level. So intuitively, yes, more number of lenders means means a higher dollar value of borrowing. But even if I keep that aside, that might not be, because when we further slice the slice, you further slice in the table, the same table that you are referring to on the left-hand bottom table, you still have, in spite of the 4 lenders, you have few of them at under 50,000. This is a factor of what stage their loan rundown is. So, that is why we walk that path. But anyway, we are wiser now, and I've been belaboring this point that, we will consciously stay away from, this will be one of the criteria of deciding a loan, which is more number of lenders will probably shy away.
Understood. And just a couple of data keeping questions. Can you share the SMA 0 book and give the proportion of AUM which is sitting with borrowers having more than 4 lenders? If that 13.8 is actually based on proportion.
What was your first part of the question? We missed it.
SMA 0 book, that is one, and proportion of AUM which is with borrowers having more than 4 lenders. Assuming that 13.8 is on proportion of borrowers.
Yeah, so if you can, get in touch with us.
Yeah, we will. Hi, Ashish this side. We will, share the data with you. It's not ready right now, but we'll get back to you with that corresponding number on a 13.8.
Yeah, so this 13.8 is on number of borrowers, right?
Yeah, that's right.
Yeah. Okay. Thank you.
Last question.
Thank you. Ladies and gentlemen, due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Yeah, so thank you, for all of you who are on the call. Clearly, this was a quarter. It was a tough quarter. All of the industry as well as us have our own set of challenges. The clear learnings as far as the as the enterprise is concerned, and we are doing our best to ensure that all the learnings are translated into action, be it execution, be it the credit policy, be it the model that you are following, and so on. So we will, we will continue to walk this path. As already highlighted to you, we anticipate things to regularize by end of this year. Until then, our job is very clearly to lend right and to collect right. So this is what we'll keep doing. Thank you very much for all the support, and best of luck and goodbye.
Thank you. On behalf of Spandana Sphoorty Financial Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.